We are the Rizki-Produkt official TV, streaming our contents from the hearth of Banjul City in the Gambia. We are a content provider devoted to advocating comprehensive reformation in the Gambia and disseminating macro and microeconomic policy failures in the Gambia. In this video content we would be looking at some of the obvious weaknesses within our monetary and fiscal policies and institutions. Our topic in this video is the transaction velocity of circulation in monetary economics. This is the rate at which money changes hands within an economy, specifically in relation to transactions involving goods and services. It measures how frequently a unit of currency is used to purchase newly produced goods and services over a specific period of time. This concept is part of the broader theory of the money supply and its relationship to economic activity. In this context, the transaction velocity of money refers to how often money is used to facilitate transactions within an economy during a given time period, typically a year. Let's take a look at the key aspects. There is higher velocity. If the transaction velocity is high, it means that each unit of money is being used frequently to carry out transactions. This is typically associated with a more dynamic economy where there is greater economic activity and possibly inflationary pressures if the money supply is fixed or growing slowly. Conversely, there is lower velocity when money is circulating more slowly, meaning people or businesses are holding onto their money rather than spending it. This may be a sign of a sluggish economy, higher savings rates, or uncertainty, where economic agents prefer liquidity over spending. Let us also take a look at the types of velocity in an economy. 1. Transaction velocity of money. This focuses on how frequently money is used in actual transactions. And 2. Income velocity of money. This relates to how often money is used in the production of income. Why are they significant in an economy? The transaction velocity of circulation is important in understanding the relationship between money supply, economic activity, and inflation. A higher velocity, for example, can increase the impact of a given money supply on the overall economy, amplifying economic growth or inflation, while a lower velocity can mute those effects. Now let us put what we have said so far in a much insightful perspective using our country, the Gambia, under the Barrow government and their banker, the Central Bank of the Gambia. In the context of the Gambia, the transaction velocity of circulation should provide insights into the dynamics of the country's economy, particularly how quickly money moves through the economy and facilitates transactions. Given that we are a small, developing economy with a mix of formal and informal sectors, the velocity of money circulation can help explain several economic phenomena such as inflation, economic activity, and monetary policy effectiveness. A vital question should arise now in all of us, and this is: what is the transaction velocity of circulation in the Gambia currently looking like? Beginning with the economic structure, the Gambia has a small, open economy heavily dependent on agriculture, tourism, and remittances. Due to poor macroeconomic diversity, the majority of its population relies on subsistence farming and informal trade, while sectors like tourism and services provide cash inflows, especially in urban and metropolitan areas like Banjul and Serekunda. In such an economy like the Gambia, money might circulate more slowly in the rural areas where informal systems and subsistence activities prevail. Conversely, in urban and metropolitan tourist-driven sectors, the velocity of circulation could be faster as money is more frequently exchanged for goods and services. Another important question to ask is: how does this affect inflation and money supply? The Central Bank of the Gambia controls the money supply and uses monetary policy to influence inflation and stabilize the economy. If the money supply grows without a corresponding increase in the transaction velocity of money, it may lead to inflation. Can we now visualize why we are experiencing an inflation rate of 18%? Maybe some can't, but let us try another way. For example, if the CBG increases the money supply to boost economic activity but people are hoarding money due to economic uncertainty, the desired boost in consumption and investment may not materialize. Conversely, if money circulates rapidly, even with a stable money supply, it could result in inflation as more money chases the same amount of goods and services, driving prices up. Now let us take a look at how tourism and remittances play a huge part in all this fiasco. The tourism sector, which is a significant source of foreign exchange, influences the velocity of money during peak seasons like we are about to experience soon when the tourism season resumes. During the tourist season, there tends to be a higher velocity as foreign visitors spend money on services, accommodations, and goods. Remittances from people in the diaspora, a vital source of income for Gambian households, also impact money velocity. If remittances are used for consumption like most families do, e.g., buying goods, services, housing, this would increase the velocity of money. However, if the Barrow government was fiscally and monetarily savvy, they would come up with policies to encourage the propensity to save remittances or used for non-productive purposes. The velocity may remain low. Another question to ask: what is the link between monetary policy and velocity? This takes us right inside the Central Bank of the Gambia. If the Central Bank of the Gambia wants to stimulate economic activity, it can increase the money supply. However, if the transaction velocity is low, meaning people are holding onto their money rather than spending, it might not lead to increased economic activity as expected. To raise velocity, the government might need to increase confidence in the economy by improving investment opportunities, infrastructure, and financial services access, especially in rural areas where money circulates more slowly. My apologies before going any further, as there are too many questions to ask about our economy. Here is another question. What are the Gambia's structural challenges? In the Gambia, high levels of subjected poverty and informality in the economy due to poor policies and institutions mean that people in position of power might prioritize saving their loot or hoarding looted cash for their own emergencies or future uncertainties, which can reduce the velocity of circulation. Additionally, in rural areas where no credible policy or action is taken for financial inclusivity with the formalization and adaptation of the rural banking sector, much of the money might circulate slowly as it doesn't pass through formal financial institutions in these parts of our country. What are the key takeaways for the Gambia in all this? Low velocity in rural and informal sectors could indicate limited economic transactions and consumption, which may slow economic growth. High velocity during tourist seasons and in urban centers means more dynamic economic activity but could lead to inflationary pressures, especially if supply doesn't keep up with demand. The velocity of circulation can be influenced by factors like confidence in the economy, access to financial services, and the overall monetary policy of the Central Bank of the Gambia. Understanding the transaction velocity of circulation in the Gambia is essential for policymakers to manage inflation, stimulate economic growth, and design effective monetary and fiscal policies. This is not so complex, is it? Let those whom we elect to make these decisions know that Gambians have common macroeconomic sense. Thanks for watching, and catch you on the other side with more macro and microeconomic content.